Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Qyuns Therapeutics Co. Limited annual report. Qyuns Therapeutics Co. Limited is a clinical-stage biotech company that specializes in the research and development of biologic therapies for autoimmune and allergic diseases in China. The company's pipeline includes several product candidates at various stages of clinical trials. One of its lead products is QX002N, an IL-17A inhibitor being tested for ankylosing spondylitis. Another key candidate is QX005N, a monoclonal antibody blocking IL-4Ra for treating prurigo nodularis. The company also has candidates targeting psoriasis, including QX001S, IL-12/L2349 inhibitor, and QX004N, IL-23P19 inhibitor. In addition to its product pipeline, the company is developing treatments for respiratory diseases such as asthma and copped with QX008N, a humanized Ig-GON-MOB targeting thymic stromal lymphopoietin. Other candidates include QX013N, a humanized Ig-GON-MOB targeting c-Kit, QX006N, an IFNR-RONE targeting MOB for systemic lupus erythematosus, and QX007N, a humanized Ig-GON-MOB targeting IL-33. Qyuns Therapeutics also manufactures and sells pharmaceutical products, providing a range of services including technical consultation. The company was established in 2015 and is headquartered in Taizhou, China. Qyuns Therapeutics Co., Limited, market capitalization of $4 billion, is materially smaller than most of its industry peers of roughly $31 billion. Qyuns Therapeutics Co., Limited, trades at a lower price-to-earnings ratio of 12 times and a higher price-to-book ratio of 5.68 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 78% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company's financial performance indicates a positive trend. According to the extracted summaries, the company generated a significant amount of positive operating cash flow in 2025. This is evident from two separate sources, pages 19 and 20, which report a net cash of RMB 399,848, and page 37, which confirms this information. The consistent reporting across these pages suggests that the company's financial health is stable and improving. The company's debt level has undergone significant changes over the past year. In 2024, the total non-current liabilities stood at RMB 332,666, but by 2025, this figure had increased to RMB 417,487, representing a rise of RMB 84,821. Furthermore, the company's indebtedness also saw an increase from RMB 525.7 million in 2024 to RMB 577.4 million as of December 31, 2025. On the other hand, interest expenses have decreased over the same period. The total finance costs on financial liabilities not measured at FVPL decreased from RMB 23,388 to RMB 22,157, while interest on lease liabilities dropped from RMB 59 to RMB 54. Overall, the company's interest expenses declined from RMB 23,329 in 2024 to RMB 19,169 in 2025. Management is optimistic about the company's future outlook and strategy. The company plans to gradually move towards commercialization of its monoclonal antibody products, with a focus on making SAILEXIN an affordable drug for patients with PES and CD. By 2025, domestic sales are expected to reach RMB 300 million. The company is also advancing promising bispecific antibody molecules through IND filing and clinical stages. Aiming to solidify its foundation by 2030, the company plans to have at least 5 products approved for marketing. To achieve this goal, management will leverage strategic partners' resources, build an in-house commercialization team, and optimize quality management systems. In addition to expanding its product pipeline through R&D, the company will continue to recruit and develop talent, implementing a globalization strategy. Management expects to generate more cash from various sources as the business develops, with improved liquidity through optimized bank loan structures. Overall, the company is poised for growth and expansion in the coming years. In recent years, the company has made significant investments in its shareholders. One notable example of this is the share buyback program initiated by the company. As stated on page 43, the company repurchased a substantial number of shares, totaling 130,000 units in the year 2024. This move demonstrates the company's commitment to rewarding its investors and creating value for them. By buying back shares, the company is essentially returning wealth to its shareholders, which can have a positive impact on their investment returns. This strategy also helps to reduce the number of outstanding shares, thereby increasing the earnings per share, EPS, for existing shareholders. The share buyback program has been an effective way for the company to demonstrate its confidence in its financial performance and future prospects. By investing in its own stock, the company is signaling to investors that it believes its shares are undervalued and presents a compelling investment opportunity. That concludes the financial summary for Qyuns Therapeutics Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.